Bitcoin, I'm sure everyone's waiting on Bitcoin analysis. Now, you're hearing a lot of talk about a breakout above that 44.8 level. Yes, that's true. Bitcoin has broken out. The latest news that I'm hearing is that the spot ETF will be approved this week. Now, if that doesn't happen, be careful because there's a lot of downside potential. But I'm still in the camp that it does get approved. I've told you guys in these game plans over and over again that you have upside to $48,000 to $50,000. One thing to keep in mind, though, you are hitting resistance today on the chart. Now, resistance can be broken, right? But take a look at this, guys. Look at this line right here on the chart of Bitcoin. Take this pivot to this pivot to this pivot to this pivot, and what are we hitting right here? Just above 45,000 at approximately, what is it, at 45,500 or so? We're right into this level. So again, you do have resistance right here. Does it push through on the approval later this week? My guess is it will initially, and then I still think it reverses back down. And again, that's the expectation there. If I zoom in, you guys can see, and again, just to really show these lines more accurately, take a look. If I zoom in, and you can see, again, 45,700 right there, and the high was really close to 46, but notice it goes right through there and then right into that level. So again, Bitcoin hitting some resistance here. Let's see if it can push through. I ultimately still think even if it goes to 48 to 50, we still at some point revisit the 30,000 level, folks. And again, that'll be a buying opportunity for me on the charts if it comes back to that level. I just want to show you quickly the Ethereum chart here. The Ethereum chart I showed you last week, we have a beautiful channel. Ethereum has struggled. It continues to struggle. It is still stuck in this parallel. So again, if we zoom in, and I'll show you guys if we zoom in how clear it looks, but look at that. If we zoom in all the way in here, look at that, how it's right up against these levels here, right here, here, and today, kissing that level up there. So it is still stuck. Ethereum is stuck in this channel. That, by the way, shows you how important channels are to price action. They really can do a major job of keeping price stuck between these levels. It's amazingly impressive. Looking at gold, guys, gold is fractionally higher today. This is the weekly chart on gold. The reason why I'm showing you the weekly chart is simply to just impress upon you guys, you have this beautiful line here. We still have not broken out. We are very close to breaking out. We tried here and it failed. We are now right up against that level again. I do think this breaks out. I've talked about the inverse head and shoulders here, right? Classic inverse head and shoulders. If you do the measured move, you should go up to about 2,500 and change. And that should occur this year, should. Okay, so again, target remains around 2,500 and change for 2024 on gold. I have accumulated a fair amount of gold myself, and I continue to hold for further upside.
Hey, Crypto Street enthusiasts. It's time for your crypto fix, and boy, do we have a wild ride today. Smash that subscribe button. Ring that notification bell, because we're diving into the hottest crypto drama. Matrixport, the financial oracle, predicts Bitcoin soaring to $50,000 in January 2024. Why? The buzz is all about the potential approval of a spot Bitcoin ETF. Matrixport's crystal ball sees a breakout, but remember, the crypto market's like a roller coaster. Fasten your seatbelts. Last year, we were drowning in bearish vibes, but 2023 changed the game. Spot Bitcoin ETF applications flipped the script, attracting institutions like bees to honey. Bitcoin's trading near $45,600, and in the last 24 hours, it's danced up by 7%. Ethereum and Solana joined the party too. Why? The upcoming Bitcoin Spot ETF approval is like a VIP pass to the institutional gala. Get ready for a surprise surge at the opening bell of 2024. Matrixport's not just throwing numbers, their strategy. They estimate a U.S.-listed Bitcoin Spot ETF could attract $24.50 billion, pumping up the prices. And wait for it. The Bitcoin halving cycle in April 2024, a historic supply shortage trigger. It's like adding nitro to an already turbocharged engine. Can you feel the anticipation building? Bitcoin's flexing its muscles, hitting an 18-month peak at $45,500. Why? The stars align with institutional love, global attention as an inflation safeguard, and the anticipation of that sweet spot Bitcoin ETF approval. A financial feast for Bitcoin lovers. Fox Business says, not so fast. Expert Eleanor Turret pours cold water. predicting a delay in spot Bitcoin ETF approval. SEC's got some paperwork to review. Will it be a Tuesday or Wednesday approval? The drama unfolds. Buckle up for the suspense and stay tuned for the next 2 thrilling weeks. There you have it, crypto street heroes. Bitcoin's $50,000 joyride, institutional drama, and the ETF roller coaster. It's been one heck of a crypto adventure. Now, let's continue our enlightening discussion with Gareth Soloway.
When you talk about charts, you have to understand these year kind of end kind of shenanigans that get played. And what I mean by that is basically what you had was end of year window dressing and also this kind of feeling that no one wanted to sell because they didn't want to pay taxes in 2023. So what happens? We come into 2024 with volatility at historic lows going back again. You look at the VIX, we're talking about the VIX being at levels not seen and before COVID, before the COVID collapse. And what happens this morning? Futures are tanking. All right, we have big drops across the board in the equity markets. And number one, look at this chart. What are we seeing here? So we see the 10-year yield is beginning to spike. Now, if you remember, and this was a great call from last week, guys, we talked about how the 10-year yield had swung too far to the upside like a pendulum and had then swung too far to the downside in the opposite direction. And what did I say last week? I said somewhere in the middle is where it's headed. I think this pivot point right down here around 4.5% is where that equal kind of dead-on zone should be. And that's exactly what it looks like happening. Now, what's fascinating about this is that you have a scenario where into year end, we had all the makings of things that would cause a sell-off. The Middle East was getting kind of a crazier and crazier. The Russia-Ukraine war was still going on. We have data coming out left and right except for jobs that was not good. Remember, we've talked about consumer debt, buy now, pay later, spiking dramatically. We have the U.S. debt now hitting basically $34 trillion. All the makings of kind of a catastrophic potential scenario was there, but no one cared. No one cared. And I always say this, the market only cares when it cares, meaning that people will ignore things while it's beneficial to them. As soon as it's not beneficial, they will then bring it back to the forefront and the markets will get crazy. So essentially what we had was all of a sudden, and by the way, 6 p.m. last night, New Year's Day, New Year's evening, I should say, the futures opened up. The S&P futures were actually up initially on the day. And then somewhere in the overnight, early morning period, all of a sudden we saw the yield begin to spike here and go to the upside, and the U.S. dollar starting to spike as well. If we zoom in on this, take a look at this spike in the U.S. dollar getting back above technical now resistance. And what's the culprit here? I mean, what's going on? And the answer is very simple. All of a sudden, people, number one, they're like, okay, we held on, but we know that historic values of stocks are overbought. So we didn't want to pay taxes in 2023. So now we look and say, oh, well, now we're in 2024. I could sell today and I don't have to pay those taxes for another year. Woohoo, that's great. And so they say, okay, now what's the reasoning behind this? Well, oh, it looks like there's some, Iranian war boats coming into the Red Sea. Oh, okay, let's use that as a reason. And basically this is what it is, folks, is that you have this kind of mentality of people that they want to do actions, but then they have to justify it, or the media has to justify it. So now all of a sudden you have, the Iranian boats coming in. There's been more bombings back and forth between Ukraine and Russia. Maybe that's escalating. And people, this didn't matter. Like if all this news had happened last week, it wouldn't have caused any issues in the market. The markets would have stair-stepped slowly neutral to higher, right? But because it's a new year and people now want to sell and take some of those profits, it now becomes an issue. So now you have the U.S. dollar popping to the upside. And again, what's important here is that this is telling us that, again, there is a run to safety. When the dollar goes up, it tells you there's a run to safety. I don't think this is because necessarily the Fed is all of a sudden going to be tightening interest rates even further. That's not going to happen, right? I think they're on pause. I do think the market overreacted. But again, the markets are now beginning to price in, okay, wait, maybe we went too far too fast. We know the 10-year yield did the same thing, and now they're beginning to price in a little bit of instability globally at the start of the year. So here we have the makings. We know that when the dollar goes up and yields go up, what does the stock market do? It goes down.
Presidential candidate Vivek Ramaswamy has outlined his plan to shut down the Federal Bureau of Investigation, FBI. if he is elected President of the United States. 56% of the Bureau that are professional bureaucrats should be fired immediately. He stressed, adding that 44% of FBI employees are special agents and intelligence analysts who should be reassigned to serve under the narrow focus of other federal law enforcement agencies doing the same specialist work. According to recent statistics on non-fungible tokens, NFTs, for the past year, sales hit $8.70 billion in 2023. This figure represents a $15.04 billion, or 63.35% decrease in NFT sales compared to the previous year. That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.